Retail scalpers enter the market looking to capture high-velocity momentum. Most of them fail because they try to trade an active environment while relying on static, lagging boundaries, and they quickly get chopped to pieces by low-timeframe market turbulence. The primary culprit for this failure is the use of a single-line moving average. Relying on a single line leaves you blind to the order book structure. Amateurs see price cross the indicator and assume a breakout, only to violently reverse. They get faked out because one line cannot distinguish real momentum from random noise. To survive this environment, you must abandon single-variable lagging indicators entirely. You need a telemetry tool designed to measure dynamic kinetic energy. Algorithmic trading desks solve this problem by deploying a multi-layered telemetry framework known as the density ribbon. The easiest way to understand its function is to think of a physical centrifuge. A centrifuge spins rapidly to separate materials of different densities, deliberately stripping away waste to isolate the pure core element. The density ribbon does exactly this for price action. Instead of a single input, it processes real-time rate of change across multiple velocity frequencies simultaneously, creating a multi-layered matrix. This multi-frequency mesh completely filters out the turbulence, exposing the raw, high-velocity core of an active trend. The density ribbon shifts your workflow. You stop guessing which directional breakout might work and start objectively reading the structural alignment of the order book. A valid high-velocity trend must pass through two distinct thermodynamic states. It begins with consolidation. This illustrates the first phase, the compression knot. During market consolidation, multiple strands of the density ribbon tightly coil into a narrow horizontal band. Rotational momentum traps volume, building massive kinetic energy within a tiny spatial footprint. The operational reality of this phase is highly dangerous. A tangled ribbon indicates a toxic, untradeable congestion zone. The tactical law for this regime is absolute inaction. You lock your hands and wait. Recognizing the visual signature of the compression knot preserves your capital. It prevents you from executing trades inside an energy-building phase where the market is actively chopping up eager participants. Eventually, the stored kinetic energy is released. Institutional size floods the order book, forcing a transition. This shows the precise moment of transition, the linear ribbon flare. The compressed strands rapidly detangle, expanding into perfect parallel symmetry. The space between layers intensifies in color density, confirming deep institutional funding is driving price velocity. Attempting to short the market or trade against the trend when the density ribbon is fully flared is mathematically suicidal. You're stepping in front of a programmatic freight train. The tactical law for this phase is strict alignment. You identify the vector and you execute strictly in the direction of the flared ribbon. The linear flare is undeniable visual proof. The market has definitively transitioned from retail noise into a pure linear acceleration vector. Once the ribbon flares, the scalp setup phase begins. You never front-run the initial vertical impulse A-wave breakout. Chasing vertical price action ruins your risk-to-reward ratio. Instead, wait for the rapid B-wave pullback. After the initial impulse, price action predictably drifts back down into the expanded ribbon's core structure. The inner layers of this matrix act as an algorithmic concrete floor. The institutional programs that funded the initial breakout are actively buying the trend. Therefore, their algorithms are calibrated to aggressively defend these specific inner layers to protect their position. The tactical law for this setup is patience. You hunt for a temporary wholesale discount within a premium, high-velocity trend. Waiting for the B-wave pullback to test the algorithmic floor turns a high-risk breakout chase into a statistically safe, high-probability entry. Once price enters the ribbon chassis, you zoom in to precise data coordinates. You need exact microstructural execution parameters to enter the trade safely. This illustrates the ideal trigger. Price tests the inner support bands and immediately retracts, leaving a rejection wick against the floor. Simultaneously, a secondary momentum histogram flips green, confirming counter-trend chasers are exhausted and trapped. The execution law here is uncompromising. You trigger the trade the exact millisecond the price rejects the ribbon core and the momentum shift is confirmed. By executing here, you are utilizing the massive depth of the flared ribbon as an ironclad safety net directly beneath your entry coordinate. Relying strictly on a structural rejection wick against programmatic support removes all human emotion and guesswork from your entry sequence. Deploying a precision momentum tool is only possible if your risk boundaries are flawlessly non-negotiable. This chart dictates the exact placement of your hard-coded stop-loss. It belongs exactly one tick past the opposite structural edge of the ribbon matrix. The logic behind this placement is absolute. If the trend is genuine, institutional algorithms successfully absorb the pullback and hold price within the ribbon floor. If a candlestick completely ignores the internal bands, closing cleanly through the entire structural depth of the ribbon matrix, the setup has failed. The systemic implication is clear. The kinetic energy built during the compression knot has dissipated. The regime shift is broken. When this happens, the behavioral law is simple. You cut the microscopic loss immediately and mechanically with zero emotional attachment. Anchoring your invalidation to this dynamic mathematical boundary guarantees your structural survival during quantitative scalping operations. When the algorithmic floor holds, you transition to the payload destination, the macro velocity extension. This macro view shows the result. Price launches vertically out of the ribbon floor and into open space, successfully continuing the wider macro trend while the ribbon trails behind it. Your profit-taking tactic is systematic. You rapidly scale out partial positions at local milestones, locking in capital, and you let the remaining payload ride the trailing ribbon structure. The density ribbon is a direct proxy for real-time order book physics. The mechanical sequence requires strict discipline. Wait for the energy to build in the compression knot, confirm the linear flare, let the centrifuge filter the noise, and buy the programmatic pullback. Your execution sequence must be equally strict. Trigger entries only on chassis rejection, and defend your capital with structural invalidation notes. By utilizing multi-layered algorithmic telemetry, you stop fighting low-timeframe turbulence, and you begin surgically capturing pure trend continuation.